Well, hello, good morning, everybody. Good morning. A few people jumping on now. Welcome to another Wealth Coffee Chat. Good to see you guys up early as always. Welcome to another wonderful Wednesday, 20th of April. Thought we might chat about asset protection today. On the back of last night's mentoring, we had a bit of a conversation, a bit of a chat about, some tax ideas, some managing our costs. And I thought I'd follow up on a few things this morning. But before we do, as we always do, a few shout outs and intros. Good morning to you, Harami, James, Margaret, Graham. Great to see you guys on, and whoever you are, Facebook user. Anyway, it's always a funny one, that one. But give us a shout out if you're on this morning. Jason Witten's my name, as it says there. If you're new, or even if you're feeling keen to say g'day, just give us a shout out in the chat. Always great to hear from you guys as we hang out each morning, do a Wealth Coffee Chat. A few of you guys know we've got a couple of sayings around here. Buy well, never sell. And this thing's a marathon, not a sprint. Property investing takes time. If you didn't know, unless you've been living under a rock, folks, it's not a get-rich-quick scheme, is it? It takes time, it takes focus, and certainly takes some thought when it comes to the idea of if we're going to buy these things, should we protect them? And the answer is yes. Hey, good morning, Debbie. Great to see you on, mate, as well. Thank you for hanging out. We've been doing these Wealth Coffee Chats for a couple of years now, and each morning we hang out and we talk with some crazy crew just like you potentially, who might be into property investing as part of your wealth plan and your future. I love real estate. I'm a bit mad about property investing, and been property investing over 20 years myself, helping and coaching property investors over 18. And along the way, we've learned a couple things. We've paid attention. And each morning, I get to share a little bit of that with you guys. And hopefully, lighten the load. Remove some of the confusion and some of the misunderstanding. Thanks, Warren. Good on you, mate. Good to see you here too, mate. So listen, why don't we talk about asset protection? Last night we had our mentoring night, and we had a chat about a couple of things. We talked about, we just launched last night our property investor focused only tax business. Positive, we've had people asking us, have you got a good accountant who knows about property investing, and specifically property investing for the PAYG world, the world of most property investors in Australia. There's 1.6 million property investors in Australia, and a good, million plus of them, 1.2 million, are PAYG. The definition of mums and dads. You might be a mum, you might be a dad, you might be a mums and dads, whatever the version of the world you live in, but just regular people, but they're just doing something quite special, because owning properties, and especially 3 or more properties, you become 1% of the population. And so a specialist accountant serving less than 1% of the population, just wasn't there. So last night we kicked off with our new tax business, Positive Tax Solutions, firmly focused on serving property investors as their specialty, which was awesome. But part of the conversation last night, which we didn't get to cover, was asset protection. So I thought I'd dive into that one this morning. Because tell me in the chat, team, when I talk asset protection, when I say, hey, let's talk about asset protection, what's the first thing that comes to mind? What do you think about when I say, right, let's talk about asset protection for property investors? What's the typical response if you went and saw an accountant, or you went and saw a financial planner or some other advisor? What's their typical response? What do they tell you to do when it comes to asset protection? Put that one in the chat for me if you're feeling, if your thumbs are feeling up for it, or whatever you're on. If you're on a computer, let me know. What's the typical response? What do they say? You should do this. You should create that. What usually happens when it comes to this asset protection. You guys are all over it this morning, and the answer is yes, you should get insurance. But when you go see an accountant, do they talk about structures? Do they talk about things like, oh, you should have a company and trust, et cetera, et cetera? There you go, Sharon. And that's the typical response often, folks, out in the marketplace when you talk to, family trust, when you talk to accountants and financial planners, their world is about structures. Their world's about companies and trusts and the right way of, some sort of legal entity that you can own real estate in. But for most of us, that's not the right way to go when it comes to owning our real estate, because there's some downside to owning those things. And we're going to talk about that this morning. But, let's quickly dive into asset protection. You own real estate right now. And a bunch of you guys already nailed number one. The easiest and best and simplest way to protect your asset is to get the right insurance team. To get the right insurance, okay? That says insurance, by the way. A bit of a scribble there. And I think it might have been Debbie and Nikhil and Margaret. You guys were on it straight away. Insurance, the right property investment insurance, the right insurance for a property investment is absolutely essential. Replacement, damage, flood, fire, whatever it might be, loss of rent insurance, all sorts of things in that sort of space. The thing that I hear often when it comes to property investors, when they're just starting out and they're kind of maybe a little bit nervous, maybe this is their first investment, or they're, what happens if the tenants, do something to my property? What happens if this happens? What happens if that happens? Absolutely, 100%. And the insurance is absolutely essential when it comes to asset protection. Hey, morning, Joel. Now, when we talk about asset protection, tell me in the chat, some of you guys might be, let's call it experienced in this conversation. But in the chat, what's the common things that people are worried about? What are people worried about when they're thinking asset protection? Tell me in the chat, what are they concerned about, when it comes to, owning real estate? What's the big worry? I need to protect my assets because. Put a few answers in the chat for me on that one, okay? There's a number of great insurers out there. We love Terry Shear. They had some issues, as every insurer did over the COVID period, to rearrange their insurances. But, they still offer great insurance policies. And there's a number of other really good ones. Make sure you, understand that one. There you go. A few guys, Joel saying home and contents, what happens if something happens to my home? Yeah, nice, Nikhil. Tenant not paying, Sharon, litigation, et cetera, et cetera, et cetera. So, if we look at these things here, we go, right, home and contents, property damage and flood, tenant not paying, all three of those, team, tick, tick, and tick, will be, if you have the right insurance and it's up to date, will be taken care of by the insurance, okay? But litigation, and Sharon, I know Sharon is one of our coaches as well, and she's part of our mentoring program as well as become one of our coaches. And also Sharon's a past property manager. She's on this morning, so give her a shout out, say hello to Sharon. And Sharon said litigation there, litigation, being sued, all right? Now, is that real? And, for me, as a property investment coach, over 20 years, I can count on like less than one hand. Oh, anyway, less than one hand, the number of property investors that I've met in 20 years. So less than all the fingers on one hand, the number of property investors that I've met that have had some litigation from their properties or their tenants, okay? Now, the other part for me, that I've seen mostly is protection from either creditors, so you didn't pay your bills, or you did something wrong, or something went wrong, or spouse or partner. And there's a big misnomer, there's a misunderstanding out there that that if you have company and trust structures, that you can protect your assets from the bank or a spouse in some way, and that's not true, at all when it comes to the world of owning assets together. But we'll talk about that in a minute. So and like Sharon said, there not a lot of people are concerned about it, but what happens often is some of the professionals will push companies and trust structures because of this idea of one day someone's going to sue you for everything you got, and if you didn't have a company or trust in place, then you're going to lose everything, which is not my experience. In my case, over 20 years hanging out with over 10,000 property investors, helping people buy 10,000 properties actually, it's a very low risk, right? So for most PAYG, most people out there, if you have a job, you have a career, you work for someone else, you don't have like companies, and you don't have that next level of risk in your personal world, then this is the perfect asset protection structure that you're going to need as an investor. All right, we talked about insurance, absolutely essential, the foundation, the first piece that goes in. What's the next piece for asset protection? What will help you protect your property and protect yourself in this part? There's three pieces to this puzzle for asset protection. What's the next piece? What do you guys think number two is? Insurance, absolutely. Number two, what do you guys think it might be? What can we do? What can we choose? Who can we have as part of our asset protection triangle here when it comes to taking care of things? Abdul, boom, you're right on it, man. You're right on it. Your property manager. Your property manager is absolutely essential. Joel, income protection is part of the insurance mix. And that sometimes is indirectly done through other means, Joel, but yeah, absolutely. Sharon, your coach for sure, but more specifically, the management of the property. Absolutely, Trina. Your property manager needs to know the legislation. They need to be doing their checks on the property. They need to be doing the reports. They need to make sure that the tenant's not late with their rents and the bonds paid. And if something goes wrong, then everything's taken care of. An amazing, perfect, awesome property manager is absolutely essential. 99% of the problems with your property will occur because the property manager was not doing their role or their job or their things in a timely manner or well enough, okay? If the tenant doesn't pay their rent 1 week and then it goes 2 weeks and now it's 6 weeks, that's the property manager, okay, as we go along. So an awesome property manager is vitally important as you go along. And the third one, there's also another way for us as PAYG, property investors, we can protect our assets. A little bit more complicated, but it is very simple to do, and for most of us, we can get our heads around it. What do you guys reckon when it comes to the third part? If we really need to go the next level, if you're worried about that before you go to companies and trusts. Anyone know what it might be? The third part of this asset protection triangle. And I'll give you a clue. It starts with D. No answers just yet. All right, well, we can use debt. Okay, so, what would anyone want to sue you for? What would anyone want to do to your property or go after your property with your world? What would anyone be after? They'd be after the value, the difference between, okay, if you've got a property here, okay, if you've got a property and you've got, it's worth 500K, you've got a loan of 300, and then, technically there's 200 of something. There's 200 of something there that someone looks at you and says, all right, well, they've got some value, they've got something, and I might, might do something about that, all right? So, and this is an extreme case, and I'll just talk about an extreme case. If someone says, I've got, me and Joel, we've got a problem. We used to be in business together, me and Joel, and now we're not. And I think Joel owes me some money, and I'm going to sue Joel for some money. Okay. Now Joel has got no money in his bank account, but I know he owns a house, so I'm going to try and try to say Joel owes me money, and I'm going to get it from his house. Okay. That's that's what happens with legal cases, unfortunately. Hey, morning, Jeff. So, like in this way, the debt, how can you protect in this way, okay? So, yeah, Joel, I got no money. Exactly. So tell me right now, from a debt arrangement point of view, tell me if this is your house, and I'll tell you how myself and my partner, my wife, Shay, do this. How do you protect yourself in this space? What do you do? Okay. So what happens is you have, and I'll just tell you what, with our principal place of residence, our PPR, the one you want to protect as a priority. So on the title of the property is one person. So Shay owns the property. She owns it. It's hers. It's in her name. But the debt is in Jason's name. Okay? So even if someone wanted to have a crack at this, I don't own the property, only the debt's in my name. Okay? That's one way you can do it, especially with your owner-occupied property. You can divide and conquer. Spouses can organise their ownership in this way. That can be quite effective for tax and all sorts of stuff as well, and also some asset protection if you want to do it. Now, we could do a whole another hour on this stuff, being a bit more complicated, but you can arrange debt that way. Or, I can say I've got what's called potentially a second mortgage. That has some rights to the 200, but then Shay owns the other 300, right? There's an idea that we can arrange that. Yeah, Trina. Yeah, you should have it all, Trina, and just leave Brett with all of the risk. Well, and this is the way. There's many ways to arrange your situation in your position team. If you need a certain outcome that you want to do when it comes to asset protection. For business owners, any business owners listening in right now, often some structures are quite useful for you. But again, those structures, so companies and trusts and other things, they're very useful for business owners because of the way you earn money and the risks that you take. But again, ownership of real estate and property, for me, maybe 70% of the time, a medium-sized property portfolio between 5 and 7 properties, still it's quite effective to own it in your own name, depending on how you're structured and set up, team. So there's a few pros and cons, but I don't have time to go through the business owner one today. Maybe I'll dive into business owner asset protection, which is a bit longer conversation than 20 to 25 minutes in the morning. All right, team. Well, that's about it from me today. Just thought I would follow up with the old asset protection conversation from last night and our mentoring program. And let us know if you've got any questions in the chat, or let me know if you've got anything you want me to cover one time in the mornings. I know Alison asked me about how to structure bank accounts and certain arrangements of cash and money. And I like that conversation. I might get one of the team on to give me a hand. Karen Maloney's pretty good at that, you know, with the budgeting and the bank accounts. My bank accounts are a little bit complicated these days with, I do have plenty of company and trust structures with what I do with business and other stuff as well. So, you know, we'll maybe do a morning coffee chat with one of those. All right, team, that's it. Wealth Coffee Chat done and dusted. You guys be good. Stay out of trouble. Join me tomorrow for another one on Thankful Thursday. And we'll hang out and do another Wealth Coffee Chat. Till then, team, you guys take care. Bye for now. Adios.